Good morning. Happy Friday. Welcome to episode 1 of Feel Good Finance Friday, or as we like to call it around here, Triple F. With me, my tag team partners, as always, the lovely Kim Lanciel, financial literacy nonprofit consultant and fellow financial badass herself, as well as Sam Castellan, real estate development expert, and always able to give us that real estate perspective. Because again, here you will spend a few minutes with us on a Friday morning. We will touch on money. It can be markets. It can be money in sports, money in travel, money in food, which I think we're going to talk a little something about today. Anyways, first thing, what's happened this week in the world of money? Well, as we sit here a little before 11 a.m. Eastern time, Dow up a little over 230 points. Unless we have a major reversal, we are going to break what has been an 8-week decline in the stock market. And the last time we had 8 down weeks in the US stock market, I'm going to bring in Kim and Sam to see if they can have ideas about this or can answer this. You guys have any ideas how long ago that was?
It's been a really long time, a very, very long time. It is really difficult to kind of like gather our heads around how long it has actually been. And George, I'm probably going to guess that you know the numbers, but I've been investing for quite a long time, and I've never seen anything like this.
I mean, even it's hard to believe, even in the depths of 08, which to me felt like we were down for 3 months, right? From September when you had Lehman to the end of the year, but it wasn't even this long consecutive down. It hasn't gone down for 8 consecutive weeks in 99 years.
Wow.
It's sort of been the tagline all week. And you're sitting here saying, God, are we going to make it 9 weeks? And thankfully, it looks like we are not. So really nice bounce. I think Dow was up 5% for the week. NASDAQ up, I think, 6 or 7% for the week, adding to it today as well. So always good to see and always great to end a week with an up Friday.
Especially going into the holiday weekend. Now we can celebrate.
We finally
We can
got some
celebrate.
good news from the markets, so that's a good thing.
Finally, we shall see. And June is just a few days away here, starts next Wednesday. So we shall see what June brings. Other big news we had this morning. This is a little worrisome. Consumer spending rose by 0.9% last month, which was great. But the savings rate fell to 4.4%, and that is the lowest in 14 years.
Wow.
What do we say about that, since such an important message that we preach here on Feel Good Finance Friday is the importance of savings, and it's vital if you want to have money, to put away, especially for investing. Kim, what do you think?
Overwhelming. It's absolutely overwhelming, and just on a good day to try to save is always difficult for most Americans to do. That's why we have the issues that we have. So now here we are going into the holiday weekend. So many of us are traveling now that, things are moving forward with the pandemic. I myself am hitting the road. I'm driving. Gasoline in New York City here is $5.55 a gallon.
Unbelievable.
And I have an incredibly fuel efficient car, but the fact that I'm traveling 5 hours on the road to Virginia doesn't help matters at all. The fact that I am spending 3 nights in a hotel room, not my preferred hotel because I can't afford it anymore. And thankfully, I'm not we're going to the beach, but we're 20 minutes from the beach. We're not staying at a beach resort. It's just not in our budget right now. So these are the things that, I'm having conversations with my colleagues, with my, people around me, the other people that I work with. Got to try to figure out a way to save money this weekend.
Yeah, we're all dealing with it. I mean, from driving, like you mentioned, you look at these gas prices, you can't believe, especially where we came from, right? A year ago, it was half. It was $2 and something. And now, like you said, in New York City, over $5. I know out west, you're reading these stories about places in the Bay Area, north of $6, some places in Seattle that are, north of $7. So we hope an end is in sight. And typically we know that the Memorial Day weekend holiday usually is sort of the peak or close to the peak in gas prices. So let's hope that that stays the right way. But the article that I went to, though, savings rates lower in 14 years. And what they blamed it on was exactly that, just things costing more. So people taking from savings to be able to have those same experiences and pay for those same services. I know Costco came out, great numbers last night. They beat the number, both top and bottom line, but they warned going forward, they got higher costs and they're going to pass them on. The food prices are going to go up. However, what was noted was that hot dog and soft drink that is been forever $1.50 will remain $1.50 at Costco. Just FYI about that. So going back to these food prices, I mean, Sam, what have you seen? I know that you're in an area that is known for can be pricey to go out and have the restaurant experience.
Yeah, so I'm here in Miami, in the East Coast, and it's surprising how everything is actually even more expensive than in the West Coast. Like I was living in San Francisco until 4 months ago, and I was shocked to see that prices here in Miami are, probably 30-40% more expensive than in the Bay Area.
Wow.
And this morning I was, just following Kim's comment. Like I was reading this article from the New York Times from today that it's saying that, if you're seeing like all these prices, like in gas, right, like going skyrocketing, like that's right, that's true. But at the same time, that the demand is like slowing down. And so we see that across many other markets, right? Like we saw this report this week where they're saying that there's like an oversupply in many chain stores because, they are having this massive, supply of groceries, et cetera, that people are not buying. Maybe because, the purchasing power is less right now, just following what Kim was describing. And so I think that George is hopefully going to contain inflation. And I think that that's going to be, there's a point where like, prices go high and higher and higher, but like when people are unable to keep to those price increases, then, the demand decreases. So hopefully we'll see soon enough a stop to inflation based on this effect. So hopefully, I think that that's going to be positive.
The forever saying of "May you live in interesting times." I mean, I don't know if you can paint a more interesting time than what we've gone through. I mean, coming out of this the horrific pandemic, COVID pandemic, and having free money and ultra low rates for markets, and what that meant for risk assets for a little better than 2 years. And then the jolt to reality we've had the first 5 months this year. Interest rates, last year, 30-year fixed mortgage for a while under 3%, now over 5%. I mean, real estate has always been historically a lagging indicator. But Sam, give us just some thoughts here as we're wrapping up here shortly. But give us some thoughts on, is real estate ever going to slow down? Because we're still seeing housing prices. I was in Austin 2 weeks ago, and there's 10 folks in line waiting to bid on a home when one comes on the market. It's just insane in some of these markets, including yours, Sam.
Yeah, so I think that the main question that everyone has is like, is real estate development in a bubble, right? And so the long and short answer, I guess, they would say that as long as there is a significant demand for housing, and we're seeing that trend continues, right? And the supply being relatively limited to that demand, I think that the prices will keep going up. But then again, there's this point where things where line will cross, and I think that line is it's coming soon based on the the interest rates. Because the higher that the interest rates go, there's going to be a point where people cannot just afford a mortgage anymore, and so that's when we will see like a decrease in prices. That's probably going to be at some point next year, the next 2 years, depending on what the Fed does. But for now, I think that there's still a supply that is very limited in the housing market, and people are still in the need of a house. We're just going to pass, George, I would say, from an owner's market to a renter's market. That's going to be the big change, the big trend.
Interesting, and of course, it always depends on where you are in the country, because we do know, Sam, that demand has been quite brisk in the South Florida area since the start of COVID. Well, that is going to do it for our first episode here on May 27th, 2022. Hope you and yours have a lovely, healthy, and safe holiday weekend. Adios.